Welcome to Realty Sundays, your unfiltered guide to navigating real estate in Jamaica with confidence and clarity. I'm your host, Shania Blair-Roberts, your trusted Jamaican homegirl and real estate professional. Join me this and every other Sunday as I spill the realty on everything you need to know about buying, selling, and owning property here in Jamaica. No sugarcoating, no fluff, just pure facts. If you're a first-time home buyer or someone dreaming of owning a piece of the rock, this is your safe space to ask questions, get answers, and feel empowered every step of the way. So, grab your cup, tune in, and subscribe now so you never miss a pour of the real estate tea. Last time we talked about deposits. Now that you've started saving, the next step is to figure out exactly how much you can borrow. That's where your eligibility and your pre-approvals come in. Think of it as your financial compass, which sets your budget, shows sellers are serious, and it prevents you from shopping for homes that you can't afford. Now, what is eligibility letter? NHT issues your eligibility based on your age, your income, and contributions. It tells you the maximum loan amount you may qualify for. It is not guaranteed, but it gives you a realistic budget before you start house hunting. How do you get it? You're first required to register or log in to your NHT online account or visit online.nht.gov.gm. You're required to verify your profile information, so you need to upload your employment information, your salary data, your contribution information, and all of that to verify your account. Now, mark you, some persons are able to successfully verify their account online through the app, while others are required to send emails, and others are also required to go into an NHT branch. Whatever works, let it work, but unless your account is verified, you will not get your eligibility letter. Once your account is verified, you can request your eligibility letter right there in the app with just a click, and it is valid for 6 months. Now, I want you to keep in mind that the amount may change depending on NHT's review and your property requirements. So that's NHT pre-qualification. Let's talk about your bank approvals and what those mean and how you can go about that. So after NHT, you need pre-approval from your financial institution or your lender. So that could be a bank, a credit union, or a building society. This is a stronger pre-approval, and it is required by most sellers and realtors before they'll consider your offer. The documents that you will need: proof of income, job letter, pay slips, bank statements, TRN and ID, sometimes proof of assets. I really would like for you guys to just keep in mind that if you are not stable in terms of employment, do not apply for an approval or a bank approval if you don't have job stability, because you will at least need 3 months worth of recent pay slips to send to them. If you are in a new job and you just work a month, don't apply. Don't try to get a pre-approval. Wait until you acquired at least 3 months working experience with that employer before you submit an application to be pre-approved. A pre-approval letter tells you the loan amount you may access, and it demonstrates you're financially ready. So we want to talk about the NHT Financing Mortgage Program, which is the EFMP. Since August 2023, NHT requires contributors earning more than $30,099 per week to apply for loans through partner institutions. That's $39,099 per week. Under the EFMP, you effectively get 2 loans combined into one. So you have the NHT's portion, which is at NHT's lower interest rate, typically 2%. And then you have the other lenders, whether it be a bank, a building society, or a credit union, you will have their bank's interest rate. Some partners would include Scotiabank, JMMB, JN, Sagicor, NCB, CIBC, as well as others. I would advise you to just shop around because each bank has different interest rates, fees, and terms. So I would advise you to just shop around to see which of these would work best for you. And then let's talk about like the affordability and the budgeting. So a high pre-approval isn't a license to spend at the top of your range. Consider closing costs, property tax, and home insurance. Use the 2836 rule as a guideline. So your mortgage should not exceed 28% of your gross monthly income, and your debt total should not exceed 36% of your gross monthly income. This ensures that you buy comfortably without becoming house poor. Okay? So please know that your eligibility letter, your pre-approvals, they are your roadmaps. They keep you grounded. They give sellers confidence, and they save you from wasting time on properties outside of your reach. So before you start house hunting, before you start falling in love with properties and all of these things, please make sure that you have these letters in hand. Thank you so much for listening to Realty Sundays. I hope today's episode was meaningful, informative, and left you with some actionable steps and clarity. Don't forget to subscribe, leave a comment or review. Those would be greatly appreciated. And if you'd like step-by-step guide to buying your first property here in Jamaica, grab my free home buyers checklist, which includes a saving track for your deposit and everything else you will need for your home buying journey. It's linked down below.